I remember you joining us not very long ago, and if memory serves, you're not particularly constructive on the valuation of Uber. Fair to say?
I think we live in odd times, and attaching a $60 billion valuation to a company that lost $2 billion last year is viewed as pessimistic. But I guess those are the times we're in. Because I'm pretty optimistic on Uber, but the problem is to get to an 80 and 85 billion, there are pathways which I think are incredibly narrow. I know autonomous cars is the big deal, but that's kind of an unformed business. I'm not even sure how that business will look if it exists. So I think I'm being pretty optimistic, just not as optimistic as the market today.
Well, okay, then explain the differential in viewpoint between the markets and your own. What would you like to see, or why do you term yourself optimistic then overall for a company that clearly you don't seem interested in buying at $45 a share?
I think it's succeeded on one half of this equation. It's changed the business incredibly. I mean, it's the car service business or even the logistics business has been shaken by what Uber has done. So it's done that half of the equation really well. I've consistently underestimated its capacity to grow, but I've overestimated its capacity to be profitable. So I think the real challenge for Uber is not growth, which I think they've conquered, but whether they can deliver those profit margins sometime in the future, not even in the near future, but in the far future. So I think the key here is finding that pathway, and I think they will find it. I just don't think it's going to be easy or it's going to be as lucrative as people claim it's going to be.
So, Aswath, we're told that the company marketed itself or thinks of itself a little like an Amazon, right, which didn't value profits and grew tremendously, investors giving it the benefit of the doubt, and now it's a profit machine. Can Uber make that case?
Oh, it could. I mean, everybody seems to want to be the next Amazon. And as somebody who's tracked, and I've been obsessed with Amazon for 20 plus years, I mean, I've seen Amazon go through some hard times. I think the real test for all of these companies is not how they handle growth and success, but how they handle a downturn. Because in my view, what made Amazon what it is how it handled the 2001 crisis when it came very close to the edge. I think perhaps that's what we need for these companies to get shaken out is a crisis, and we'll see how these companies handle it. I don't think they've been tested yet.
So, what would be the best case scenario then? I mean, Aswath, I talked to people who are buying the stock who believe in 5 years they can have 20% EBITDA margins on a revenue number of, I don't know, 20 plus billion, and you can get, 25, and you can get somewhere near 5 billion in EBITDA. You don't think that that's a possibility?
I think the near term, the only way that can happen is if somehow, and this is mildly collusive, Uber and Lyft figured out a way to raise prices on customers. I know they're profitable when my ride from Newark Airport into the city cost me $75, not $43. I mean, it's been stuck at $43 now for a year. I mean, given the fares they charge, I don't see how either the drivers or Uber can make money at these levels. And I'm not sure how Uber and Lyft come to an agreement which is legal where they can raise fares without the other side trying to undercut them.
Well, one school of thought is that now that Lyft and Uber are coming public, Aswath, that maybe the duopoly allows some rate increases over time, right? Isn't that the hope?
That is the hope, but there's a tipping point. At $60, I go back to taking New Jersey Transit and the subway from Penn Station. So they don't have unlimited pricing power either.
Your habits have not been changed and have not been fundamentally changed how you get around.
Not to that extent. I'm not that budget unconscious. At some point, I'll switch. And my guess is that a lot of people who've come into ride sharing have come not from taxi cabs and car service, but from other modes of transportation. There's a tipping point that they'll have to face.
But there's Eats, there's freight. You mentioned Amazon. Obviously, shareholder letter number 1 was always about securing future cash flows. To the extent that that's worked out, why not with Uber as well, moving into different areas, spending now to obviously accrue later?
I think the taxi cab business was a particularly soft one. It was an easy one to take out. Once you move into freight and delivery, you're looking at businesses which don't have as much softness as the first businesses they went after. And if you look at Uber's success, Uber Eats has been the only obvious extension that they've had that's made the money. And I think it's the one that's closest to the ride-sharing business. I don't think Uber Freight's really gotten off the ground because it's a much more difficult business to break into and kind of grow at the rates that they have the rest of their businesses. So unless you find really soft businesses, growth is not that easy.
But I have to disagree. I've spent some time with Uber Freight. I mean, they are already setting up an infrastructure that I think is rather amazing and is definitely incredibly environmentally friendly. And I think that's going to matter a great deal. You're not going to have that truck going from Dallas to Minnesota filled and then have it come back empty if you use what they have built. And they expect that they will reduce the price of freight between 15 and 20% by year end. Nothing would shock me with this company. They do have a very good logistics arm. So I know you may think that they're not there, but of the different businesses they're going to go in, I think that's one that they could astonish because of the ecological greatness of what they're offering.
I mean, I'm open to possibilities, but until I see the numbers show up, and they still haven't. So maybe they have the infrastructure designed, and you're going to see it take off in the next year, 2 years, 3 years. But I'll believe it when I see it in terms of the numbers coming through. So I'm a skeptic in terms of that business providing the kind of margins that they'll need.
But remember, hiring's up 165%. They're beginning. I mean, they're in very much of a rollout mode. Lior Ron has promised nothing, but this is something you can't write off before it starts, which is what I don't like to believe can happen.
I'm not writing it off. I mean, as I said, to get to 60 billion, I need to still.
Disagree. It's not an alternate universe. I think you and I could both agree. It's not like you think the tariffs are paid for by this and I think.